Hello and welcome to this edition of Closing Trades. Got Sampath Reddy on the show with us. We've got Kunal Bothra as well joining in on the technicals. And yes, the rebound sustains. 0.5% higher is where we are at. Though I must say that it hasn't come, or rather it has come with its fair share of volatility, although in a narrow band. But the question on everyone's mind is that is it done? Is the poison out of the system after that big carnage that took place yesterday? Let's try and figure out exactly that. And Chandan Taparia as well is on the show with us. Kunal, what's the reading looking at the index? Does it seem like there's going to be some continuation of stability?
Yeah, there should be a couple of days of more stability for the indices. The only aspect positive about the markets today is that you have the sectoral front where you've seen the bank Nifty making a very strong comeback, and it's playing a very strong balanced effect to the underperformance of the Nifty IT index. I think that's a stronger part about the markets in terms of the sectoral composition. On the Nifty front, the only concern is that we've not yet broken past about the yesterday's high for the index. In an ideal scenario, when the index gets into a bounce back, we expect that the index would at least break past about 1 day prior swing high, but we've not yet given a confirmation of that. But just because of the sectoral balances, I would believe that potentially over the next couple of days, you should probably expect the index to get into a very mild kind of an uptick, and 23,000 as a support level. I think that should broadly hold for the index over the next couple of days.
Okay, we'll wait by and see whether we hold on to those levels or not. Today, at least the mid-cap index and the broader markets are recovering too, and the Bank Nifty is also showing good amount of strength. Chandan, would you say that we're out of the woods when it comes to the Bank Nifty?
Yeah, good afternoon, thanks. So Bank Nifty has seen a recent recovery, but the problem is the follow buying activities. In fact, we have noticed that Nifty recovered till 23,250 marks, but follow-up is missing, and again index corrected by 100 points from its higher levels. Similarly, Bank Nifty recently broken the key support of 50,000, and it was respecting well its rising channel on the weekly scale from last 2.5 years. But after breaking that, the follow-up is required. It needs to hold beyond 49,000, then only the stability will be baked. But yes, supports are there, so we have to be in a broader range. So I believe that 47,500 to 49,000 or 49,500 would be the probable range. We can play some bounce back move, but again, one need to keep in mind that bounce will be only short-lived, or it may be the dead cat.
Sure, makes sense. Sampath, hi, afternoon. What's your reading of the market? You think much of the global and domestic parameters are in the price, or do you think there could be some more, downticks in the days to come?
It is a little difficult to say how the excess valuation that are there in the mid and small cap segments will be readjusted. Even with the yesterday's fall or the last few days fall, mid and small cap companies, I think broader valuations of that segment as such, still on the higher side. Whether it will be a prolonged time correction or an accelerated growth in earnings, which way it will lead to the bring the overall multiples of the mid and small cap segments is difficult to say. But I think at this point of time, with whatever the correction that we had seen so far, I think large cap segment looks very, very attractive. The valuations are now, most of the large cap segments are, quite attractive. And within that, especially the banking as such, is looking, much more attractive as a sector wise. So it is, I don't think, mid and small cap sectors, the worst is over. I don't think the valuations have come to a very, attractive levels there. They're still, I think, elevated as compared to its own historical, valuations, and also even otherwise, and to get paid about, 12-13% kind of an IRR over the next 3 to 4 years. I think mid and small cap companies are not priced for that yet. So we have some more, paint left, I think, in the mid and small cap companies.
A bit more perhaps correction in the broader markets, though financials look attractive. But what within financials, Sampath, would you bet on? Is it NBFCs? Is it vehicle financiers? Is it home, loan providers? Is it PSU banks, large private banks? Which vertical would you rather be more positive on?
At this juncture, where the credit cycle is evolving, we had already seen in the Q2, the MFI as a segment had seen, elevated delinquencies, asset quality getting deteriorated. At this juncture, I think we would prefer to, stay with the, large private sector banks. They are pretty much priced very well, and for a 12 to 14% kind of a return, these banks are quite attractive with those kind of expected returns. Mid and small cap banks or NBFCs, or some of the affordable housing kind of lenders, etc. They may have a potential to give a much bigger returns, but I think the risks are also higher there. Within the overall lending space, at this juncture, we would prefer to stick to the larger private sector banks as compared to the other NBFCs and other lenders.
Interesting. Kunal, on the charts, what is your take on the entire financial space? And this is NBFCs, private banks, PSBs, all alike. What's looking like a good buy and where you feel the selling could be overdone?
So on the banking side, I think ICICI Bank could be amongst the first ones to try and make a strong comeback. From the mid cap end, Federal Bank is also something which has been fairly less volatile. I would not say stable, but fairly less volatile as compared to rest of the other private sector banking names. So these are the top two names from the banking side and the private sector names. Then you have Bajaj Finance, which is looking attractive in terms of the NBFC pocket. That's a stock which I think, if I'm not wrong, is just 100 points shy of its previous multi-week breakout, just about that 7,500 odd mark. So that's a chart which is looking attractive. Then from the contra space, if someone is looking at a contrarian buy, then I would believe Shriram Finance at current levels is something which looks very attractive. Then you have L&T Finance, which I think around this 130, 140 range is also looking more into a deep oversold territory at current levels, where the indicators, the RSIs are almost single digit for the stock on the shorter term chart. So I think these could be few stocks which one could look out for.
Okay, but there is definitely quite a bit of momentum when it comes to the Adani group of stocks. I mean, take a look at Adani Power, that has been doing well, Adani Green, Adani Transmission, even Enterprises, Gas for that matter, all of these stocks are fired up. And suddenly some of these PSU names and the mid-cap banking names are doing quite well. So in IOB, up 18%, Central Bank up 18%, IDBI, UCO Bank, they're up anywhere between 15 to 18%. Even Bank of Maharashtra, for that matter, is up around 10 to 18%. In terms of, take a look at that. Maybe there is just this stake sale in 5 PSBs, which is actually causing that bit of excitement, because all of those 5 names are something which is actually doing well. So the government may allow the stake sale in 5 PSU banks, and that's exactly the kind of reaction that we are seeing, that maybe if there is a, external party that does come over, will the efficiencies actually increase, and they will do the QIP, which means that they will have more, of course, headroom available to lend more and grow more. So it's a developing story that we are tracking at this point of time, and all of these stocks are actually reacting. If I can quickly come to you, Kunal, as far as the charts of these 4-5 companies are concerned, because they have shot up, is there any name that you would still buy after the kind of big upticks that we are seeing?
I think IDBI could be a good bet at current levels. The stock has fairly been a lot more positive and buoyant over the last 2.5 odd years. I've also been tracking Bank of Maharashtra. That's another chart which has been very strong on the longer term basis. I think there was a point when the stock was almost at single digits, 8 or 9 rupees, moved up to 70 or 75 thereabouts, and now has corrected back towards 45-50 range. So that's another chart which is looking attractive. So very few selective pockets from this smaller cap PSU banking names where I would probably bet on.
Okay, point taken. That's something to watch out for. Just trying to track as to what the current holding of some of these, banks are. Just give me a moment. I'll quickly check that, because just wanted to understand what the reason is of the same. Is it in terms of getting the, efficiencies into these banks and the privatization, or is it just coming in from the sense of, kind of getting the public ownership, the minimum public ownership norms in place? Just give me a moment. I'll quickly track that, because all of these stocks are reacting quite heavily at this point of time. So what the street is trying to bake in will be important from that point of view. The system is can't really figure that out, because found it for at least Central Bank, it's 93%. So it is possible that for some of these companies, it's just in order to bring in the lower levels of, because the public sector, the public entities, listed entities need to have at least 75% of only 75% can be held by a single entity. So maybe from 93% it's expected to come down, and that's the reason some of these stocks are reacting. But there's another news flow that is hitting the screen, and that's on HDFC AMC, wherein the revenue growth has been around 5% quarter on quarter. I just saw an initial uptick on the stock. We'll have to wait by and see what to really make of these numbers, because sequentially there's a decent amount of growth on EBITDA. It's single digit, but at least higher single digit at that, 8.6% on EBITDA. The margins have improved on a sequential basis. It stands at 81.7% versus 79.3%. So there has been a bit of an improvement. We'll have to, of course, confirm it with as to what the street expectations were, because on the profitability basis as well, Aisha, it's a 11% sequential growth. So standalone doesn't look bad, but we'll have to figure it out what the expectations were.
Yeah, exactly. But yeah, that's the hot space, right? That's something that the market has liked for a while. And, time and again, it has been proven. The entire AMC pack, the listed players have been doing good. And HDFC AMC, one amongst them, 1.25% higher. But let's just wait by and get in more details of the earnings. But Sampath, what is it that you're making of this entire capital market theme? Because it's believed to be a structural, story with many a kind of variety that you can find within the listed universe right now.
Right. I think, yeah, that is true. Overall, the entire capital marketplace have done exceptionally well. And thanks to the kind of a growth that we have seen in the overall investor base that's rising, and the mutual fund companies continues to attract a huge amount of SIP flows. And also the overall, last 4 or 5 years, the trading volumes, especially the post-COVID, the trading volumes have also shot up a lot. So entire value chain within the capital marketplace, whether it is a depositories, whether it is the exchanges, whether it is a wealth managers, whether it's the AMCs, whether it's a brokerage companies. I think, last quarter, by and large, most of them had seen about 40% growth in earnings. I think this quarter also, YOY could see a 30 to 40% growth in earnings for this capital marketplace. So far, I think, they've been doing quite well. And also all of these companies are, have a huge operating leverage. Return on capital employed is exceptionally good. So, that's, these are the sectors. This segment continues to do well. Even the, RTAs, whether it's CAMS and KF FinTech, these are the companies which have been doing quite well in terms of profit growth for the last 3 years. I think valuations are also quite stretched. But, on the flip side, one has to be careful just in case if the markets were to be turned a little bit bearish, they will also see, degrowth in earnings as well. So one has to see a little bit, valuations in that context, where if the volumes were to come down, so all of them will see a, decline in earnings also at a faster pace.
So good chatting with you. Thank you so much for your time today. Thanks for joining in. In fact, since we're talking about the capital marketplace, just this morning we were chatting with Sandeep Tandon from Quant Mutual Fund, and he also was spotting several pockets of value under the capital markets theme.
Let's say when India economy is going, I said that the depth and the breadth of the capital market is rising or increasing, which is definitely the case, and that's the background. All exchanges, wealth management company, we are equally bullish on the wealth management space. I'm equally bullish on the AMC as well as the insurance space. Ultimately, if economy is going to grow, hospital benefit is going to, this space will grow. Okay, don't expect the linear growth sort of thing which we have seen in the past, but broadly constructive. Okay, let's say today on the AMC perspective, this quarter may be bad for everybody because the AUM has collapsed because of the market collapse. But that does not mean from a longer term perspective, I think these are sunrise industry. I call this could be emerging FMCG space. Sector is in our favor, under ownership is in our favor, valuation is our favor. Okay, and they were the biggest beneficiary of the rally which we happened. Whatever reason it has not played out, that's a different issue.
Back with closing trades right here on ET now. Some amount of stability at least. So we are holding on to that 0.5% gain. 23,270 is where the index sits. It's the Adani names which are really on a powering move. There's Piramal Enterprises, Idea. But again, these are also stocks which have seen a fair amount of correction play out, not just from the 52-week highs, but especially yesterday as well. But also to add to that, it's been a slew of management changes in large cap names like United Spirits, Nestle, Avenue Supermarts of late. In fact, Sharad is here from our research desk to walk us through all the rejigs that have happened recently.
Well, interesting management changes happening of late, and importantly in the MNC space, we are seeing a lot of action happening in the consumption names. First of all is United Spirits over here. There's a change of guard happening. Hina Nagarajan She would be actually taking up a new role in the Diageo Group itself, but the incoming CEO would be Praveen Someshwar. He is the CEO of HT Media for 5 years and a decade or two, a career coming in PepsiCo as well. Interestingly, up next is Avenue Supermarts. The stock has been in focus recently as well. Now, outgoing MD CEO is Naveen Narona. He has stepped down from this post after 2 decades, and also he has 8 years of service in HUL also added to his CV. Anshul Asawa, he would be the new CEO designate from 15 March 2025 itself, and he's the country head of Unilever in Thailand. And interestingly, he's the general manager of the home care business also in the Greater Asia. He had spent 30 years in HUL as well. Moving on, we are having Nestle over here. MD outgoing is Suresh Narayan. He had joined the board in August 2015, roughly a 9-year-old journey. And the incoming MD is Manish Tiwari. He's an HUL veteran and also a former country manager of Amazon as well. Angel One also in focus. There hasn't been an exit, but a group CEO has been appointed, and that is Ambarish Khenge. He has held managerial roles as a VP in Google Pay and Myntra as well. Lastly, India Cements would be in focus recently, and of course there has been change in corporate structuring. N. Srinivasan is the outgoing founder and the promoter, and recently Ultratech acquired around 55.5% stake in India Cements as well. Incoming CEO is Suresh Vasant Patil. He is having 35 years experience in Ultratech, and currently he is heading the ready mixed concrete and building products division at Ultratech Cement.
Okay, thanks so much for that, Sharad. Those leadership changes having an impact. But just a quick look at the market, whether we're holding on to gains or not, because it's been a topsy-turvy ride of late. Today, there was largely a bit of a, kind of a semblance around the 23,150 mark, and that's exactly where we've managed to be at right now. Public sector banks, those select ones on news are up. You also have Adani Power doing well. Olectra, Green Tech, JBM Auto, some of these, commercial EV players are also doing well, and Mazgaon Dock has been holding on to decent amount of gains. On the losing side, it's HCL Tech, which is down 8%, LTI Mindtree 5% lower, L&T Tech down about 3%. Ajay, we've got 2 earnings so far, very divergent kind of reactions coming in. TCS was up 6% post its earnings. HCL Tech is down 8% post its earnings. The likes of, LTI Mindtree, L&T Tech, at least for now from the stock moves, are reacting negatively, perhaps speaking in a weak set. How should one play the IT pack right now?
IT is a buy. IT is very much a buy. I think we bottomed out on IT about a quarter back. Earnings were expected to be weak because of the seasonality factor. What the market was looking at was the order books and the flow of large orders. And that was a good good news came in with Accenture and with TCS, both in terms of bulging order books. And finally, the digitization strategy, the cloud strategy, starting to take wing. And the AI, portions are starting to kick in. That was the expectation. Now, company by company, I would not like to comment, but I would say the sector stays one of the better sectors to own this year and in future, and we have probably gone through the worst. The US economy is doing well. The order flows are good from both BFSI as well as manufacturing. In the US retail, we have to wait and watch. More clarity will come over the next 15 days as more US earnings will come in. But US banks are going to have a blockbuster quarter, and you can expect more IT spends from US banks, and Indian IT will benefit from that as well. And more, I would be, very selective on IT in terms of maybe 3-4 companies at the top end, and mostly in the mid-tier IT. That's where you will really see the growth and outperformance coming in.
Ajay, wanted to analyze the market crash as well with you. And yes, we're calling it crash. We've already fallen at an index level itself about 10%, and more so, of course, for individual names within small and mid caps. Do you think the buying opportunity has come, or one can look at least nibbling in as of now?
I think we can wait out, Aisha, because, the issues are more global. And today we saw, the Bloomberg story came in that the incoming Trump administration might look at calibrated, gradual tariffs. And we saw Asian markets recovering, even US futures going up. So trade policy has become very center of plate. I think no harm in waiting out 2 weeks and seeing how things pan out. The normal SIP flows definitely those should be put, but I would say right now caution. We have too much in terms of event flow. Biggest being Trump coming in next Monday, and there will be 10-15 executive orders being passed. So how does that go through? This week, you will see the Trump appointees standing in front of the Senate. So we'll have to wait and watch if especially the Secretary of Treasury and the Secretary of State get through the Senate committees and get approved. I think that will be critical for the markets. US CPI, not much move expected there, 0.3% year on year, month on month. Core will stay at about 3.3. Markets have factored that in. I hope it stays at that. If it is even slightly higher, you could see one more sell-off in the US markets, and that will bring in global sell-off. So higher global yields, stronger US dollar, higher US Treasury yields, Trump coming in, meaning tariffs, meaning higher borrowing by the US government, and the Fed not being able to cut rates as fast as the market had earlier anticipated. Maybe conflict between Trump and Fed being set up over the next 2 months. So those are the global big factors. Domestically, we have the budget and the RBI MPC meeting. The monetary space has become less for RBI to cut. Unfortunately, the October or December opportunities were not grabbed. Those were easier days to have cut the rates. Now with the rupee tanking the way it's going down, I don't know what the situation will be, but you need some counter-cyclical monetary action, and a rate cut would be more.
Sure. The rate cut. Sorry, we have got you on a bit of a patchy line. We'll try and reconnect, but the verdict seems to be that the rate cut cycle is not going to be as sharp or as deep as the street was factoring in, neither in India nor in US, especially in India with the rupee weakness. One will have to factor that in, plus growth being a bit of a challenge. So we'll have to watch out for that. But separately, all of these Adani Group of companies are doing very well today. Ajay, any view on any of these names from the Adani pack?
No, I think it's a relief rally, more of a relief rally on Trump coming in and less regulations in the US, and hopefully Trump as a friend of India or a friend of Indian business or a pro-Indian business. But more than that, very difficult to say. These kind of moves are very difficult to really analyze or project. So mostly the word on the street is that there is hope with Trump, and a lot of this kite flying that was happening with the Democrats, that might get put to rest. So that's the big hope that's driving.
I just wanted to analyze whether the market would have the same set of leaders as we did before this correction transpired in the market. So do you sense that it's more the bottom-up stories where there is valuation comfort? They are the ones which are going to peg higher. And let's just talk about the large cap universe right now.
Aisha, what I think will outperform public sector banks will have very good results. So yes, I would say it is a bottom-up stock pickers market. The macro top-down people will not outperform in this kind of a market, because when you have had 9 years of very strong markets, now is a time for a pause probably this year. We were a little contra to it. We felt that the US market will continue to do some heavy lifting and carry this forward. But the way US yields have gone, and then the global yields have gone with that. Second, the strength in the dollar. So the US Treasury has allowed the dollar to strengthen so much. There has not been any calls to other central banks, any coordinated efforts to calm down the dollar. The dollar is hurting the global economy, and that will be an issue. So overall, excuse me. Overall, I would say that the issues remain on the global front. Really, the big challenge is global. Domestically, we'll be able to address. It was a question of 4 months of very slow spending by the government. Second, RBI being hyper hawkish when they should have, injected given some boost to the slowing economy. Those indicators were already showing up by July, August itself that everything is not good with the economy, especially aggregate demand is going down. I think RBI missed a couple of quarters of action, and we are paying the price now with tight liquidity and too high rates. And even now, Aisha, if it is cut, the rate is cut. It takes 9 to 12 months to really impact the economy. That is the trouble with monetary policy. So now fiscal policy has to do heavy lifting, but the government had chosen a fiscal glide path where they would have reduced the fiscal deficit.
Okay, point taken. So that's a view coming in as far as some of these, thoughts around fiscal deficits, the way forward, consumption and all of that is concerned. But as we're starting off 2025, it's been a volatile ride in the first 15 days itself. But how's the year likely to pan out and which are the themes to watch out for? Let's hear out from top market voices as to what they are watching out for in 2025.
I'm constructive on the utility space, very constructive on power space till 2030-32. That's an area which I will like to give. FMCG has potential to come back. Staples have to come back. Given the government stress on this space, we expect some amount of, if I not say freebies in that sense, but it's some amount of soft corner is there that money will shift from larger infra projects to some of these schemes. So that's the one area of concern, and plus crop has been very good. Rural economy is coming back after 4 years, so we are constructive on FMCG space.
Travel and tourism continues to be strong. It's been great for the past 2 years. Real estate, I think, has still a couple of more years of legs left in them. And my view is that as we get closer to a 5-year cycle of the real estate sector, of real estate development, where people would actually get keys and move into their apartments, you will see a big spurt coming in everything that a new home needs.
No better place to invest in, to my mind, than the financials, which would probably lead the next rally. Other than this, the dollar rupee move, which I think is on a near permanent basis in that sense, will benefit pharma in a big way. Even the IT space could benefit because part of it, the gains will get passed on to the end consumers, but the IT space could also benefit from the tailwinds here. Other than that, the India manufacturing story, the India PLI story are themes which in the central space along with financials will continue to be the place where money could come in.
This whole manufacturing, this whole industrialization, this whole investment in the power capex is a real story. See, we are seeing it globally. The demand for power and infrastructure rollout has improved significantly, and outside China, not many countries had invested in the space for the last 10 years. So I think that's something one would like to buy on everyday clients.
Okay, that's the take coming in on where there is value in the market. For now, of course, it's the Adani Group of names which are leading. There's a BEL which has seen quite a bit of uptake of about almost 4% or so. There's Shriram holding up almost about 4%. And PSBs, like Ajay was just highlighting, SBI leading the charge, a good 2.5% higher there as well. There's of course Tata Motors, Hero MotoCorp, Maruti, M&M. They are the ones which are also looking up as we speak right now. Ajay, what about autos? Do you think the hay gains are already made, or do you sense that there's still money to be made from at least the erstwhile leaders, your likes of M&M and Bajaj Auto?
Yeah, I think passenger vehicles will do better. Two-wheelers have been disappointing. Tractors and passenger vehicles are on the recovery path. Commercial vehicles still not doing well, and two-wheelers are still challenged. Again, a question of demand. So if you see a big rural allocation in the budget, then you will see two-wheelers running up and trucks running up. But overall, I think passenger vehicles and tractors is the place to play autos. And of course, the auto ancillaries, tire companies. But the European part is very challenged. Now the calculations are showing that they need to put something like 50% tariffs on the Chinese to be competitive to Chinese automakers, given the scales and the government subsidies that the Chinese automakers are enjoying. That's the kind of competitive tariff that European automakers need. Not very good situation for our auto ancillary suppliers into the European auto market as such. So one has to be careful on that. It's not a sector that you can give a sector call. I would say more domestically focused passenger vehicles and the tractor segment, there is some amount of recalibration happening after a number of years of underperformance. So these two will do better.
Taken. In the meantime, you have New India Assurance, which has managed to suddenly perk up quite a bit. So some of these insurance companies are in focus. So at the highest point of the day, 11% higher on that one. On the losing side, KFin Technologies, United Spirits, and some of the real estate names. Ajay, what's the sense on real estate? Do you think the cycle has peaked both for the sector in terms of fundamentals as well as the stock price?
I think stock prices ran up much faster than the fundamentals. And if you were watching the commentaries last year, the problem that real estate majors were really facing was approvals and new projects kicking off. So whoever had the earlier problem used to be liquidity. That has got solved because a lot of the weaker hands have got wiped out. And with RERA there, only the strong hands are there, and most of them are now in the listed space, so they can raise money quite easily. So the liquidity issue has gone. Excuse me. The real estate turnaround has started about 3 years back, and it's normally a 10 to 13 year cycle. So this is more a blip in a bigger structural cycle. I would say the stocks had run up too fast. The real estate sector will do well. Stocks will take time to digest their run up, and then they will again start rallying. So watch out for more project announcements and who has got, in accounting terms, who's going to recognize more revenue. So a little bit of hard work will need to be done in recognizing the winners in the real estate pack.
So good having you on the show. Thank you so much for taking the time out and speaking with us. I'm going to hand it over to Snehi then to wind up the day for us.
Well, absolutely. A lot has happened, and at the same time, not much has happened on the Nifty because the Nifty has remained rather range-bound. But nonetheless, we are above the 23,200 level finally towards the close of the day, and it's a 0.5% uptick coming in on the Nifty right now. Sensex also following suit, not too far behind, a 0.4% uptick coming in on Sensex, looking comfortable above that 76,500 mark for now. Broader markets, they were the ones that were doing really well in today's trading session. The Nifty mid-cap has outperformed the market, and how today, because 2.7% gain coming in just on an intraday basis on Nifty small cap, on Nifty mid cap, and Nifty small cap also 2% gain coming in over there. Advance decline ratio comfortably in the favor of the advances today, and this is all because of the broader markets. Let's pull up a Nifty Bank and see what Nifty Bank is up to, because Nifty Bank also very good uptick coming in the last couple of minutes of trade right now. 1.7% higher is where the Nifty Bank is, and a lot of that has to do with the PSU banking space as well. It's the top sectoral gainer right now. Let's pull up the Nifty PSU stocks, because the government has allowed the divestment in 5 names: Bank of Maharashtra, Central Bank, UCO Bank, IOB and Punjab and Sindh. In fact, IOB is locked up in upper circuit of 20%. All of these stocks doing very well for themselves, and massive gains coming in the last hour or so of today's trade for these names. HCL Tech was the one that was beaten down in today's trading session and has largely kept the Nifty range bound, because the 8.5% cut coming in on the back of largely inline set of numbers, but weak brokerage notes as well as weak management commentary coming in. Adani stocks, they were the ones that were stealing the spotlight today. Adani Ports, Adani Enterprises. In fact, you have Adani Enterprises, that's the biggest Nifty gainer in today's trade as well. So those bunch of stocks have done pretty well for themselves. On the back of brokerage notes, Biocon was in focus on the back of an HSBC note and an upgrade coming in. It's the second day of gains coming in for Biocon, and 6% higher is where that stock is as well. Jefferies came out with a note on BSE that was also very positive. So BSE also is a stock that has done very well in today's trading session. Let's talk about PFC and REC. Second second day of upgrades coming in. Yesterday we had a Macquarie note on them. Today we have an ICICI Securities note on them. PFC, they've initiated a buy on REC and PFC. 550 target for PFC and 600 for REC. So both of these stocks, REC 7% gain coming in on both of these stocks today. They have done really well. JSW Energy was another stock in focus today. The company has submitted their plan for the acquisition of KSK Mahanadi Power, so that also stock 6.5% higher. The broader market largely has done very well in today's trading session. United Spirits, although, was beaten down on the back of the management change of Hina Nagarajan announcing her stepping down. So that stock was down and about in today's trade. But nonetheless, we are closing in the green when it comes to the Nifty. We look to hold above the 23,200 level for now. A 0.5 of an uptick, which is a 0.5% uptick coming in on Nifty 50, and well, it's been a session of recovery today, rather range bound, but nonetheless we have seen a tinge of green on the street today.